Welcome again. As we look at the incomplete records, we have showed you in two previous lessons how we can find profit and capital based on the information we have received. Now we are going to be doing at this time preparing the income statement and the balance sheet from the information that we would have received. And this would perhaps be classified as incomplete records. Yes? We're going to be using this information to proceed to do the income statement and balance sheet. All right? And we are going to seek to apply each of the steps we have indicated in our first lesson. So if you have not seen the first lesson, it would be advisable at this time that you go to the first lesson on incomplete and single entry and incomplete records, and of course to learn the concepts and the procedures, and then come back to this lesson. Nevertheless, we're going to seek to take you through the process for you to understand what it would take to prepare the business income statement and balance sheet. We're working with Sandra's books, and this is what she has provided us. So the first thing we're going to do, we're going to be ascertaining Sandra's capital. We're going to try to determine Sandra's capital from the information presented. Now, we are going to use the opening capital, the opening assets and liability figures, right? Asset at start and liability at start. And what do I mean by that? We're going to be using this figure. This is going to be an opening figure, all right? And we're also going to be using all the figures here relating to the opening assets and liability to determine her capital. Let's proceed. So we're going to do the statement of affairs. As at December 31st, 2015. So we're going to start with all the assets that they have. From the question, it seems we're seeing motor van. So there's a fixed asset. So we begin. And that is motor van. And the motor van figure is $35,000. All right, we go right away to look at current assets. And we're starting with our stock. Stock of goods. And the stock of goods figure, we're told it is 16,000. All right. Our next move is to deal with the bank, and the bank account is presented here to us, and the set of balances. So we're using the opening balance. So it's going to be, we have debtors. Let's take the debtors first. Trade debtors. And the trade debtors figure is 18,000. This is it. Yes. And then, the bank balance. And the bank balance is 20,000. We're going to also have cash. And in the question, do we have any cash? Was it stated? No. All right, we don't have any cash. So we are working, but we also have expense prepaid, telephone prepaid. And the telephone prepaid is $1,000. Okay. All right, so we would have captured I think most of that information. Our next move now is to total, and we'll get that's 20, 40, 50. That is 750, 50. Would that be 55,000? Let's go again. 8, 9, yes, 5, 4, 55,000. We're going to subtract now our current liabilities. All right, and in the question, our current liability would be creditors, and the creditors figure is 24,000. We also have insurance owing, opening insurance owing. And that is insurance owing 5,000. We also have this is owing as well, please. So it is expense, general expense owing. That's gen expense owing, opening figure 1,800. And that's it. Yes, good. So we're going to total these. All right, and we're looking at 008. That's 910 and 3. Okay, it will be 30,800. All right, so we can add. Sorry, we want to subtract now the total current liability from total current asset. And let me extend here. So this is subtracted. We're going to be having the figure here. That's 0, 0. Bring down the 8. And no, that's not true. I'll take that over. That's going to be 2. Right? Then it will be 4. Right? So 4, and that will be 2. So it is 24,000. Working capital will be 24,200. Something that I want to say very important, that you always double check, because your figures must be accurate. All right? Very important to take the time to make sure the figures are calculated properly. So if we go again, 8 from 10, 2, that's 4. Right, good. So we can now add the working capital with the fixed asset. That is going to be 2 here. That's 9. And that's 5. So we come to this segment, finance by, and the capital. It would be the 57,200, 59 rather, 59,200. So now we would have completed this and we'd have found capital figure. I'm going to write it here just to follow up. So the capital would be 59,200, just to make sure how we're going to move this. All right, so we've worked out the statement of affairs to find Sandra's capital using the asset and liability at start. Yes, balance, opening balance here, and all these other balances that come in. And you notice we are using December 2015. These figures will come over into 2016 at the 1st of January. All right. Let's move now to do the next activity, and that is, so we'd have done the statement of affairs. Our next move now is to do the adjustments in relation to finding our sales figure and our purchases figure. We're going to approach that now. So now we're to move to find the sales figure and the purchases figure based on the information presented. And what we're going to be using is the concept of control accounts to determine the sales and the purchases figure. All right, so we're going to do our debtors control. And you know that is the same thing as our sales ledger. For sales ledger control, and our creditors control, same as our purchases ledger control. Okay, all right. Now this in the debtors ledger, debtors control, or the sales ledger control, we're dealing with debtors, so the opening balances are going to be, the opening balance rather is going to be on the debit side. So let's go to the list here. We have two sets of information. This information, 2015 is the earlier one, so it is the opening balance, and 2016 December, the closing balancing figures. So we're identifying our debtor. And the opening figure is 18,000. So we come to the debtors control and we have balance brought forward is 18,000. Once the debit side, once the debtors control is record the opening balance on the debit side, then the closing balance will be on the credit side. So the closing balance figure now would be 21,000, and we'll write it here. Now, one of the things that is very important is that you use what you have or what you know. Just enter that information that you already know, which is, so we have entered what we know. We know the opening balance of the debtors and we know the closing balance of the debtors, so we enter that in. All right. The second thing that we're going to be doing now is that we're going to be going to the bank account to see if payments were made to our debtors. If we had received payments from our debtors. And we go to the debit side, and that's right here. Right? Receipts from debtors. So we receive some money from our debtors, and that will reduce our debt. Remember, when we're doing it, we reduce our debt, so we put it on the credit side. So it's going to be bank, and that amount is 190,000. So we would have identified from the question the items that we have, yes, to use to determine our sales figure. All right. Now we're going to add these, subtract it from that, and the difference is going to be our sales. Okay. So let's do that now. Yes, 109. This is going to be 1. 9 plus 2 is 11. And that's 2. That's 211,000. Alright. I'm just looking back to make sure my addition is correct. Yes. Yes, good. So we're going to subtract now the 18,000 from the 211,000, and that is going to give us our sales figure. So what is the sales figure? It would be 193,000. All right. So we have found the sales figure. That is what we will do. Now, there are times we will receive a question, and this particularly, most times in the debtors control, we are obtaining credit sales. There may be a situation where there is cash sales. So you would be adding the credit sales that you have here plus the cash sales provided in the question, and you add those two together to give you the total sales. What did I say? The cash plus the credit sales, yes, and that will give you the total sales. So the cash sales plus the credit sales, because really in the debtors control, the sale that we have here is credit sales. Okay, this is credit sales. So there are situations where you have worked out this credit sale that they indicate that the business also had some cash sales. The cash sale may be in the bank account or in the cash account, or it may be stated in a note form, the amount of the cash sales. You would add both to give you the total sales. All right. Now, we're going to the debtors control and we're doing the same thing. We're going to take the opening balance of the creditor, and now we're saying that the creditors control account is dealing with our creditors, and creditors are current what now? A current liability. So the opening balance would be where? On the credit side. So we're going to put in the opening balance here. So it's going to be balance brought forward, and that's the opening figure, which is this figure, the earlier figure, which is 24,000. And the closing, so once our opening BD is here, the closing is going to be on the debit side. So we're going to have 28,000 balance CD rather, and that is 28,000. All right, so we put in what we know, and our next move is to go to the bank account that is presented to determine if monies were, we had paid some money, yes, to our creditors, and that is showing up right here. Good, that we have payment was made to creditors of 92,500. So we'd be reducing our creditors, so it's going to be here bank, and that figure is 92,500. So once we add the information here, subtract it from here, we're going to get our purchases. And again, this represents credit purchases. Well, let's go. This is 0, 0, 5. When we add these two, we're going to get, yes, am I right? Yes. So that's going to be 0 now. That's 11, 12. Okay. So that looks like 120,500. All right. We're going to take the 24,000 from it. Then we're going to take 120,500 minus 24,000. Let's see if we can do that quickly mathematically. All right, this is going to be 6. That's going to be 1. That's 11, and that's going to be 9. Yes. Yes, to go from that 9. So it's going to be 95, 92, 96. Is it? Yes, 96,000. So it's been 96,500. All right, we can now close. As I said before, always make sure your calculation, when in doubt, check it, because you need to produce accurate figures. All right, so we have found the purchases figure and we have found the sales figure. All right, so sales figure is 193,000 for sales. Remove this, and the purchases is 96,500. Okay, so 130.93. All right, this is 96,500. We'll be moving this again to do the other adjustment. So our next move, so now that we have found the sales and our purchases, the other adjustment we're going to do now has to do with the expenses. We're going to do some adjustments to get the total figure to move to the income statement. All right, so we're going to take this out to do that now. So now we are going to do the adjustments for expenses, and we'll proceed to look at the first one, which is telephone. All right, so we have prepaid. So a telephone account as an expense, so telephone account. Now, prepayment, we said opening prepayment is an asset, a current asset. And once the item is a current asset, then asset carries debit balance. And therefore, the opening balance is going to be on the debit side. Let's do that. So it is going to be prepaid, brought forward of 1,000. As I said, we use what we have and enter it first. We know the closing. So the opening here, the closing, we can put in that right away as well. Prepaid CD. And the closing is 1,400. Now that we have entered both, we can go to the bank account to ascertain information about the payment for telephone. And we see it here, right here, that telephone was paid. The bill was paid for $8,000. So we go here, bank, and it is $8,000. Again, we're dealing with an expense account, and they are treated as assets, they're treated like asset, and they carry debit balance. So once we are paying for expense, we're going to record the entry on the debit side. Hence the reason we enter this information on the debit side. All right. Now, as I said before, we're dealing with incomplete records. So some things are missing. So we're only taking what we have to produce what we need. So we pull from what we have to produce what we need. So that is why we look for what we have here and apply. So now we can add and subtract, and when we do that, the difference is going to go to our income statement. All right, so let's do it now. This total is 9,000, right? And so over here would also be 9,000. We're subtracting 1,400 from it, and that is going to be 7,600, right? 6 plus that with 10, 9, 8, 10, right? Correct. So we have identified the total for the telephone that will go into the income statement. All right, so we have completed that. We're going to the next item, which is insurance. So we open our insurance account. They indicated to us that insurance is owing, same thing as accrued or outstanding, or another word is arrears. So, the opening insurance owing or accrued is a liability, current liability. Liabilities carry what kind of balance again? Credit balance. So the opening figure must be on the credit side, the opening owing. So we go there. Accrued. or let's use the same wording as given, owing. So we write owings brought forward. And that is 5,000. We have an opening and we have a closing. So we do the opposite. Owings CD of 8,000. All right. Now the difference will go to the state. No, sorry, we're going to check for payment. And where there is a payment here of 6,000. So we go bank, 6,000. So we have paid an amount of $6,000 through the bank. All right, we're going to add 0, 0, 0. That is going to be 14,000. We'll now subtract the 5,000 from the 14,000, and the difference is going to go to our income statement. All right. When we take 5 from it, we're going to get 9. Right? So the figure that for insurance to go to the income statement will be $9,000. All right, we have one other expense here that we need to adjust. That is general expense. So we open general expense. All right, I am going to do an adjustment here quickly to bring it up a little more. So the general expense account, we're going to do the same procedure. We have opening, it's an owing, so we have general expense owing. So the opening figure is going to be here. So it's owings brought forward. How much is it? 1,800. And the closing is 3,000. So we go to this side. Owings CD of 3,000. And what do we do next? We go to the bank account to see if we had paid anything on general expense. And yes, it is 15,000. So we write bank 15,000. All right. The total is going to be 18,000, and the difference is going to go to the income statement. So we're subtracting 1,800 from this. So it's going to give us 17, what is it now? 17,200? 17,200. All right, is my math right? No. 2 we're taking from 8. No, 2 is 16. 16,2. All right. Let's see if we're correct. 0, 0, 8 plus 2, 10. All right. This is 7, 8. Yes, we're correct. So we'll be transferring 16,200 to income statement for gen expense. All right. So we have done the adjustments in relation to expenses. Since we're going to be erasing it, I'm trying to make sure we record it on the top here. So we have for telephone is 7,600, and insurance is 9,000, and gen expense is 16,200. All right. All right, we're going to proceed now to look at the income statement. All right, so now what we're going to be doing is the income statement. So we're going to pull up, prepare the income statement. So it is income statement for the year ended, what's the time we got again? December 31st, 2016. All right, we can dive right into it quickly with sales. And we know the sales figure is 19300. All right, we're going to less our cost of goods sold. Yes, and we can now take the opening stocks. The stock here, opening stock figure is 16,000, so it is 16,000. Then we can put in add our purchases to it. Yes, we had found our purchases, written it up here, which is 96,500. Okay, we can add this 005, 612, and 9, 10, 11. So it's 5, 12, 6 plus 6, 12. Yes, carry 1, that is now going to be 10, 11, right? So we're going to subtract our closing stock. Our closing stock would be this stock over here for 2016, and that is 27,000. All right, so we're going to subtract 27,000 from that. Yes, and we're looking at what now? 0, 0, 0, and no, so that's not true. It's going to be 5, right? 7, and that leaves 6, no, 7. 7 plus 5. 7 plus 5 give you 12, no, so? Yes. So it's 5. All right. And that is going to leave us with 10 to 8. All right, that looks to be 85,500. We're going to subtract, right? 5, yes.